Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors for this segment, Admiral Markets. It gives me great pleasure, as always, to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, how are you?
Yeah, not too bad, thank you, Nick.
How's your week been?
Yeah, interesting. Yeah, a bit like the weather, changeable, but you know, plenty to get my teeth into day to day. Yeah.
Pleased that Dr. Yellen has sort of come to the rescue, if that's the right word, or clarified the situation.
Well, I think if my interpretation of that was that she's trying to rewrite history. You know, they voted not to do anything, and now she's saying they actually want to do something.
Yeah.
It's a bit hurt, you know, saying that actually what I find it surprising she had to have medical treatment after that speech. So obviously took it out of her. And interestingly, you know, over in Japan there also seems to be a similar sort of sense of denial. They seem to think that they've curbed deflation there, and that everything in the garden's rosy. But once again, I have to.
We're a little bit cynical on that, aren't we? OK, let's go through a number of slides. First of all, let's go to the data released over the European session. What's caught your imagination this morning?
OK, well, we start with inflation data from Japan, which almost, to my mind, seems to refute the Bank of Japan's claims. But core CPI, so a narrow measure of consumer price index for August, this is the year-on-year number. It comes in at minus 0.1%. Better, it must be said, than the forecast minus 0.2%, but still, you know, diametrically opposite the prior read of plus 0.1%. So it doesn't look like deflation's been squeezed out of the Japanese economy to me yet. I'm sure we'll talk about that at greater length in due course. Over to Europe, a positive number from France. It's a while since we had one of those, but French consumer confidence for September comes in at a read of 97, sharply better than the forecast 94, and indeed the prior read of 94. So some crumbs of comfort there for the French government. And then probably the most important number of the day, Eurozone private loans, so the amount of money that's being lent away from the public sector. This is the year-on-year number for August, and we do see growth. We see a growth of plus 1%. However, that's below the forecast of plus 1.1% and marginally above the prior read of plus 0.9%. Now remember, the ECB's flooded Europe with liquidity via QE and its TLTRO operations, but it would appear that the banks are not racing to pass this money on and quite happy to sit on it and bolster their balance sheets, which is not the intention. So it'd be interesting to see what the powers that be in the ECB try to do about that. And in terms of data points to look forward to next week, and obviously we'll talk more about some of these on Monday. We have Spanish retail sales for August on Tuesday, German inflation, and this is the harmonised index of consumer prices measure. This is the measure that the ECB prefers to look at. That's data for September, and that's also on Tuesday. And then on Wednesday, UK GDP for the second quarter as well. So, you know, quite a few interesting data points to look forward to.
Understood. OK, let's move on to the European movers today. What's on the list?
Well, we stay with the auto sector because obviously it's attracting most of the headlines, most of the action at the moment. BMW in Germany, BMW GR, the ticker there, €79.82 earlier this morning, up around 4.94%. Had a big fall yesterday. When it seemed that they may have also been up to
emission issues.
Yeah, but German magazine Auto Bild that perhaps broke that story yesterday has clarified its position, saying it has no direct evidence that BMW manipulated exhaust emissions data, and the stocks rallied back accordingly. And then here in the UK, Lloyds Banking Group, ticker LLOY, the UK government who have been reducing their stake have managed to get their stake in the bailed out lender down below 12% for the first time since the global financial crisis, and that's perceived to be good, and rightly so. It is good news. 75.01 pence they were trading up 1.5% on the day.
Understood. In terms of M&A, let's take a look at rumours and movers.
So we come back to a sector we touched on a couple of months ago. Japan Tobacco is in talks to buy assets from Reynolds American, ticker RAI, in the US in order to expand beyond its traditional Japanese domestic markets. They're interested, or said to be interested anyway, in paying around $5 billion for some Reynolds brands, including Natural American Spirit, which is a business that had sales around $658 million in 2014. Just to remind viewers that Reynolds is now the second largest US tobacco company, having bought its own rival, Lorillard, for around $25 billion back in June this year. Japan Tobacco have said, or the CEOs said back in February, that this would be their year for acquisitions, and so this may well not be the last deal that we see in the sector in 2015.
Understood. Right, let's turn our attention to US data points to keep an eye on.
Okay, one really in the crosshairs today. GDP for Q2, the final read. The forecast is for plus 3.7%, which was in line with the previous read of plus 3.7%. So no revisions expected. If there is a deviation away from that, particularly if it were to be revised downward, then again, there'll be a question mark about rate rises within 2015. Obviously, a stronger number could flip that on its head. And in terms of what we can look forward to next week, personal incomes and expenditure on Monday, the ISM manufacturing survey on Thursday, and of course non-farm payrolls on Friday.
And I see the non-farm payroll, the median forecast is 190,000. Yeah. Okay, so let's take a look at the US pre-market movers and some chart levels.
Okay, well, first of all then, Rambus, technology company RMBS, $11.44, up around 7.4% pre-market, and the stock has rallied on confirmation of its inclusion in the S&P Small Cap 600 Index. Just to put that move into context, the 52-week high for the stock is $15.49, so still perhaps some upside to be found there.
Yeah.
And then a stock that's attracted loads and loads of press coverage this week is Nike, ticker NKE in the US, $124.87, up 8.78%, and it posted an earnings beat and talked about substantial future order growth across most markets after the close last night. And actually, the new orders were very impressive indeed. Lots of double-digit gains there. So they've obviously got their act together.
Chart points. Yeah,
okay. Cash levels as ever. So in the FTSE, we remain below, on the downside anyway, the 6,000 level. So 59.60 is our downside level. Plays 61.30 to the upside. Apologies for the exceedingly wide range, but that's how the chart has left us. It can be slightly tighter in the DAX with 95.85 our downside level, plays 90.700. Obviously, there's a bit of a recovery ongoing there after the sharp sell-off earlier in the week. As far as the US markets are concerned, mixed price action, I'd say, yesterday, though there is the suggestion of a hammer forming in both the S&P and the Dow charts. So 1915 on the downside in the S&P, plays 1935 to the upside, and for the Dow we look at 16,105, plays 16,230 to the upside. Currency wise, the dollar seems to regain some composure, so against the euro now we're back to 111.20 on the downside, plays 111.90, yes indeed, on the upside. And then in Aussie dollar, US dollar, we're straddling that 70 handle again, so 69.90 on the downside, plays 70.35 to the upside. Dollar yen is trying, well, the yen is trying to weaken. 120.66 plays 121.16 at the moment on the upside. And then in cable, the recent rally has evaporated again, so 151.96 plays 152.50 on the upside. But I think in all those cases, it's more about the dollar reasserting itself than anything to do with the local currency.
Understood. Let's wrap up with a final slide in focus, and I think you've got something to say on the S&P Industrials.
Well, we talked about, or touched on Caterpillar earlier in the week, and I just wanted to come back to the US industrial sector on the back of that. So just to flag here that this is something of an earnings benchmark as a sector, and so what happens to this sector will greatly impact on the wider S&P. The sector accounts for around 16% of the S&P by market cap, and as we know, contains many well-known blue chip names. As I say, as we approach Q3 earnings, which kick off officially on the 8th of October, there are concerns about the performance and outlook. So looking at the chart here, you don't have to be a rocket scientist to see that we've come back to, as of the close last night, some very key support levels. According to FactSet, the industrial sector has seen the largest decrease in earnings expectations over Q3, and seen a revision of, an expectation of a fall in earnings of minus 5.7% from the prior plus 0.1% that we would have had at the beginning of the quarter, and 53 out of the 66 stocks in the sector have seen an EPS forecast cut. And yesterday, of course, we had some news from Caterpillar. They warned on profits and announced up to 10,000 job cuts. The stock fell 6.28%. The sector itself is very closely correlated to the S&P with a positive correlation of 0.92 over the last 3 years. And Caterpillar is correlated to the industrial sector by around 0.69%. So again, a strong positive correlation. So what's happened to Caterpillar could easily be a portent for the wider sector and then in turn for the S&P as a whole. So it's going to be a very interesting earnings season indeed.
Understood. Okay, Darren Sinden, that wraps up the Wall Street Crossover Show. Thank you, as always, for your continued support. Just to repeat, normal time, 1 o'clock on a Monday and a Friday moving forward. There's no show Tuesday, Wednesday, Thursday. Have a good weekend, people. We'll see you bright and breezy, 1 p.m. Monday. Thank you.